Good morning, everybody. This is Dee Dee with Power of Three Trading. Thank you for joining. I'm not here just to educate you on the strat, but to also show you how you can profit from the strat techniques. If you'd like to learn more about the strat, please reach out to my guys, Rob Smith at Smith's in the Black channel, or Rob in the Black on Twitter, or at Sepia Group. So, market is looking a little gloom. We've been talking about this now for a bit. You can see I'm going to start here with the Qs because we talked about maybe some support levels on the monthly way back here, and you can see they broke that. We drew our our support here on our weekly chart, right? It's this was the monthly outside month here. So this was a monthly outside bar to this outside bar in the month. You can see it broke that here in April. It tried to retrace back into that range. Let's see, here was this outside bar. Retrace back into this range here. But again, it failed, right? So it failed. Came back down, and so we said, okay, well, if it breaks these levels again, this could be ugly, meaning taking a new low. So here we are now here in May. Trade it down, Fed noise, raise rates, half basis point, came right back down, could not hold this level. Now here, I drew this broadening formation here. This is monthly broadening formation. This is a 2 down count range, March of 21, back to this outside bar. So if you can see here, yesterday's closed inside this outside bar, guys. This area is congestion, right? So a lot of consolidation, a lot of conflict. So this was September 20th through November 20th. You have an outside month, an inside month, outside month to the upside. What does that mean? There is probably, if we're looking at these on shorter time frames, you're going to see a lot of, and we can try to show this. This is November, right? So you see a lot of indecision, inside bars. We could see that coming back down, and I think we saw a bit of that yesterday, where the market opened up choppy before it really started to trade to the downside. So just be careful in this range. Whether we're talking about an 18-minute candle or a daily candle or a weekly or monthly, this is your trading range. And so just like I talk about on all of the other outside bars, remember, I like to trade reversals. I am thinking 3-2-2. So what I did was, so if you look at this candle here, this was a 2 down bar. This is your 2 up. So you have an outside month, price traded 2 up. Now you're trading 2 down back inside this month. So what I did, guys, is I drew this broadening formation from this outside bar back to this next highest bar in this range. And because, well, I'll say highest, it actually trades below. I was going to do it to the inside bar, but it looked like this. Yeah. And I said that will be our next level, but it's got to clear this range as well. So I drew it from the low of this bar to the low of this bar. And then you can look at this range here, which is basically the low of this bar, 266.97. All right, so here's where we are. Right now, the Qs in pre-market is at 290.05, so just a little bit below yesterday's close. close was 290.95. Now we're at about 290.07. If the month continues to trade below this level, so meaning it doesn't trade back inside this range here, yesterday's low, then our next level, guys, is going to be right around here. Okay, 281. So just continue to monitor that. And again, if you're long, and it depends on your portfolio, there are ways if you have a lot 100 shares, if you're long any shares, there's maybe selling some calls against that. I don't know what you guys' portfolio looks like, but there are some strategies you can use to help. We didn't talk about that because I generally don't teach it, but there are strategies that you can use when you see the market declining like this. You just sold some calls early on to help cover, but this has been choppy. It's been ugly months. You can see this big outside month here. So just be diligent if you're day trading. Just be careful. If you're day trading, you're scalping. I'm not holding my calls overnight. And so in this down market, right, I would not hold calls overnight in the down market. And so here's where I'm at. Price continues to trade down this month. Remember, this is a monthly, so I'm not saying today. This is a monthly candle. I drew this broadening formation on the monthly ranges, right, from this outside bar. This would be my next target on the monthly, and then the low of this bar here at 266.97, right? So if it breaks this range, you can see it continuing down in this outside bar here. And then this bar here is the low of this range. So I could just add that here. All right, so this is what I'm looking at on the monthly if price continues to break down. All right. Let's look at NVIDIA. And this is what I mean by the choppiness. This was very difficult. I actually didn't trade it. Price traded down, hit our level here. So let's go back. We drew our broadening formations off the 4-hour chart, right? So the low of that prior day, and then we had to go way back to draw that, and the low of this prior day, I don't want to go back and look at it, takes so much time. But if you go back and look at yesterday's video, you can see how we drew those. But it was the low of this day, the low of this day. And the reason we had to go so far back was because of what we just described. The market, NVIDIA is not as worse off as some of the stocks in the NASDAQ that are now trading below their pre-pandemic lows, but NVIDIA is breaking down, right? So here you are in this month, 159.03, and look, guys, you got another outside bar. And so I'd be looking, if price continues to trade lower below this range, 159.03, it could certainly go lower. Let me just do this for a minute. Let's see what that looks like. So 129, 130, 130. Yeah, if it continues to break down. We do have a 2-up bar here. Let's see what that looks like. So, I'm going to take that here. Okay. So yeah, so it's already broken that level. It'll one high 162. So today, looking at price action, it may trade into this range here, this 2-up bar. So you'll be inside this range, 162.77, this outside bar. So you can see if it breaks this level here now. This is not looking good. All right, so let's go back. So here's how, again, I didn't trade it. I didn't like it. And the reason I didn't like it was because I think I shared with you guys before, I do not care for all of these outside bars. And price traded down, hit our lower broadening formation here that we drew, right? Off the low of that day, came right back up, and you can see this and on several charts, traded up, hit this level, which we didn't draw, so I didn't have any levels there. Traded up, traded back down. So you had this choppy noise in the first hour of trading before it created this outside bar here. Maybe there was maybe there was an opportunity here on a 3-2 here, right? So this created this outside bar triggered by this outside bar here, 3-2-2. Maybe there was a trade there. I didn't care for it. You're inside this 90-minute, which I don't care for. Then you had a 2 up, a 2 down, a 2 up, a 2 down. I mean, this was all in the opening range. Remember, this was your open. This was just ugly. So if I did something like this, it literally stayed traded inside this opening 18 minutes all day until it finally broke below it and stayed below it. And that was this level here. That was this broad information here. So this would have been a difficult trade because it was so choppy. Middle of the week, you still would have been profitable if you had gotten short here. We knew we didn't want to go long because we needed price. Remember, this was an inside bar. So we needed price to trade above this range here. I guess I didn't make my notes. We needed price to trade above this, this range. Remember, we talked about that because this was an inside day. So our strategy was, and and that's what it was. I said, yeah, I would look to go long here, but when we do this show, it's before any news. And so CPI report came out yesterday. That's what I'm remembering now. We had CPI number. CPI came in hotter than expected. CPI creates volatility, just like non-farm payroll. It's one of those indicators or economic indicators that the market watches. And that's why we had that volatility yesterday morning. I drew a blank. So CPI in conjunction with the market is just at some annual 12-month lows. And so what you're seeing here is a lot more volatility, and you can see NVIDIA is still trading lower today. You know, maybe you could have held that short. I would not hold call short, but puts, given where we are in the market, maybe a little bit less risky, but that's what you had yesterday. It was just a lot of noise, and after CPI number came out, so there was no long at all, because we would have had to remember the only way this would have worked is if it had gone, after it had taken out yesterday's low, gone 3 outside bar for us to go long, right? Because we were long above yesterday's low. I'm sorry, yesterday's high. So we were short all the way. So you could have taken a position here off of a 2-2. Let me just look at what that looked like on a 15-minute, because I know a lot of guys trade out the 15. So you could have taken a position here. Let me just delete this, you can see this. You had this doji, which I hate. It traded up, traded back down. You didn't see any solid candles until after the 60. And so if we're looking at that, the 60 closed up, and then you had this reversal to the downside, then you had an inside bar, and then you had this move here to the downside. So off of an inside 60, you could have made some money there and not worried about your options because that's where the market gets you. You pay a premium in this volatility. then the market starts to stabilize. Options now are probably, you probably paid more than the option is worth. And then you need this type of move to either break even or become profitable. When price action stays inside that range after you've paid a premium to trade in this volatility, generally options prices start to lose value over time if they stay inside that range. So just be careful with those. I'm still working on my small account strategy, and I'm looking at just trading off of inside 18s. And in this case, you didn't have one, we would not have traded NVIDIA today. Tesla, on the other hand, we would have, which is where I made where I made money. Now, I did get caught up in this range, dumb me, but fortunately I was able to make it back up. I saw this move too short. I was on a conference call with someone on another, it wasn't a call, it was another Zoom call with some other customer, and I missed this move. I should have gotten in earlier. This was our 18-minute flip, and because I saw this hammer and I was like, I want to get in up here. Well, no, I didn't. I got in later and immediately got triangled out, and I lost money on this. Then we got our inside bar here. Now, here's what I want you to think about. This is a 2 down, 2 up, compound 3. Can you visualize that? We didn't have an outside bar here, but you had a 2 up, 2 down, compound 3. And this, right, is outside of everything back here. You with me? So if we were, no, this isn't a triangle, it's a box. But what I'm trying to get you to see is that this, all right. And so this is what Rob would call a compound 3. So that 2 up, 2 down. Right, this 2 up, 2 down outside of this range here. So what does that mean, guys? You have to get outside of this range. And what happened, you know, fortunately, took this inside bar here, but it did not get outside of this range, traded back up, took profit. Then now you have a 3-2-2 situation, and now I'm looking to get outside of this range. So I have this broadening formation, but now you have this broadening formation with this outside bar. And so once price traded below this range, now I feel confident. So I'm taking my position here. Now I feel confident that once price traded below here, it's going to take this range. It did, it stayed down, and we were able to make our profit. Yeah. Yeah. And so so Renee, thank you, and I appreciate you following me daily. Yeah, I think that's what I'm looking at, guys, is when and I'm going to show you here my my gapper list from yesterday. When I started looking at this, because I've been studying a way to help the small accounts. So if I only have, and the way I'm thinking about it, if I only have, let's say, 2 trades a day, how can I maximize this? And for everybody that's watching, and you know, I hope I get some feedback on this. If you're watching this video, here's what I want you to think about. High frequency trading and small accounts probably aren't the best combination, because the more you trade, and psychologically, if you're taking, you know, small, what we call death by paper cut type of losses, you're going to make more psychological mistakes So we talk about that, you know, my Proverbs 21:20, you know, we want to be wise in our decisions, right? And so what I'm thinking through as I'm going through this myself, I said, well, if I had a small account and I took this position here and maybe this position, I may not have another trade. So that means we have to be wise in our decision making so that we can capitalize on these types of moves. Because now maybe I missed a real move. All right. So I'm thinking through it. And if I can, because I still have my $1,000 account. But if I can make this work without, because I'm trying desperately not to add money to the account because I'm like, man, I want to, but that's going to defeat the purpose, because the whole purpose of me creating that account was to see how I could grow it and then how I can share other people how they can grow it. But when I make a mistake in here and then I don't have any funds available, now I can't make up any losses. And so that's what I want that to my challenge. Yeah, that's what I want my challenge to be about. And so I'm still working on it. But so let me just show you what my setup looked like for yesterday. Now, of course, I'm not trading these all in my small account. So I don't want you to guys to think that that's my situation. So you, again, but here's what I do want you to think about: how you could have, if you, because not everybody has a small account, but if you do, how could you have set up your gapper list? So remember, and I'm going to try to do this with gappers too, because I really do have a belief that for small accounts, this is the best way to grow your account. And so that's why I'm testing this. You guys, if you watch my Benzinga video, you know, I trade, you know, reversals. So I like gappers. I like gapper reversals. And I like trade price action to trade up, right? On a TTO, and reverse to the downside on a 2-2 continuation, right? So I don't like to trade directly into the lows after price has gone 2 down. I like a TTO to the upside, which is what you saw here yesterday in the market. This was all TTO noise with continuation to the downside. Okay. So even with NVIDIA, even though it was an inside bar, oh wow, this was from way back. Even though this was a inside bar here, right? This was 2 down, inside 2 down. That's a 2-1-2 continuation pattern versus a 2-1-2 to the upside reversal. Okay, so we want to understand the difference. So we want price action to TTO on continuation patterns on a daily chart, and then continue to the downside if that's the case. Else we trade gappers. And so here's what I really just want you to look at, and this is why I came to this yesterday as I was just monitoring my charts. I said that it has to be an inside bar or a 2-2 or 3-2-2, right? 2-2-2, 3-2-2 on the 18 with range, right? And so the way we do that is we'd have to wait for, I mean, you're probably waiting for the 60 to close, or at least the 90 to close, because on those inside bars, well, no, the 30, you could get an inside bar on a gapper, and the 1006 would be your first entry. Okay. So what does that mean? If you're small, if you're gonna do the small account challenge using some of those techniques, it would be you would not be trading before the top of the hour. So you're essentially not trading before the first inside bar. So just take a look at that, you know, on your own at your own time. You know, look at your your charts, your go-to list, and look for those inside bars and kind of study that and say, how could I have made money on those inside bars? How could I have drawn my broadening formations to ensure that, if price doesn't work, I can get out of that trade quickly. Those are the things I want you to start thinking about, okay? All right, so here is where we are today. I'm gonna chart Disney. Disney reported yesterday. They missed on top and bottom, but so to the bottom line was 9% down, surprise to the downside, and 4% to the surprise on the top line revenue. But but their subs were higher. So there was initially price traded down, then it traded up after market, and you can see it's trading down now. So we're going to be watching this for our gapper today, and let's see how we can chart it, because Disney is getting hit. I'm still interested to see what's going to happen with the change in law here in Florida. I'm in Florida, guys, so where the governor made some changes, basically tell Disney you can't operate as a governing body anymore, meaning they no longer have the ability to govern themselves on their property. And the tax implications, there's going to be something that falls out of that. We'll see. But here's where we are. Price is trading near pre-pandemic lows, right? So that was here, March. Okay, so not quite. This is pre-pandemic, yeah, because February was when the market, yeah, here we go. All right, so you're in this range here, COVID range. And so we got this outside, so we're gonna have to go to the daily because we had to go so far back. So we're gonna go to this outside bar here, all right? I'm gonna go to this outside bar. This looks good. That's inside this range here, because this is where you are. Price pre-mark 180. This low here is 180. Ah, look at there. So you're right here, guys, in this range at the low at pre-market. So right now, yeah, we're okay. So we'll keep drawing. So the outside bar there, we're gonna go this outside bar here. All right, that looks good. That's inside this range. This outside bar here to this outside bar, to the low of this bar here, that's inside this range. Now you have another, so absence an outside bar, guys, and we go to the next two down bar, that's right here. I don't have another bar in this range that's lower. Right, here's another two down bar here in that range. Not sure if that's gonna, yeah, so that brings us here. Okay, I actually like that, 95.78. And then you'll be in these ranges here. All right, so that's how we're gonna play it. So this outside bar here, right, is actually, what's that, 98.65, when we drew that back to here, 135. All right, so that's going to put us right here, guys, and I like this range. All right, that's put us right here. So 95, this is where we're gonna draw this lower broadening formation. So this will be our first target on Disney. So it's already gapping down now. It's five points from its prior day's close. The range on yesterday was just over $5. So what am I saying? You're already probably at your average daily range on this gapper. Okay, that's important to know. It may hit and trade back up. Let me see if I can get a range at this level. What is it? 198. Let me see if I can just draw a line here. What's this? That was this. We did call it. Where were we, guys? Right here. 125. Where did we draw that? Yeah. Yep. I'm gonna just draw a horizontal line so we can envision what that looks like here. That was 125. And that is 99.66. We could have drawn it off that outside bar. Yeah, I like that better. I'm going to draw it on this outside bar instead. Okay, 99.66. So that's where I'm at on Disney on the short side. On the long side, it's got to trade back above this range. I wouldn't. Now, keep in mind though, I could scalp this. All right, so here, yeah. So here's where we are. If price trades here and holds, then I may look for a scalp here. Let me see if I can get a range on a shorter time frame. We have this outside bar on a day, on a 4 hour. What I would look for if price traded back up, then this will be my target, 104. So essentially what I'm saying, so this is a 4 hour bar, right? 4 hour candle. You have an outside range, a 2 down. And so for price to trade back to the upside, right, it's got to take out this 2 down candle. I'd look to go long. So I'm going to put my target here. So that's for scalp. So here, let me describe what I'm saying again, and then we'll close. All right, so we're going to bring this back to the 90 and our 18. All right, so let me say this again. Price is gapping. It's probably already, so at this gap, you're already looking at your average daily range. So if price hits this lower broadening formation from that outside bar we drew on the daily and holds, and you want to scalp, this is going to be your target. Okay, so if that's how you trade, you want to look to trade a reversal off this level. Look for this to be your first target. So right around 104.40, 104.50. Okay, so just be careful with that. If this stays below this range, guys, then I will look to short below here. If it trades above this range, then I'll look for opportunities to maybe go long, but then I have to draw my broadening formations for other targets. And so basically that means if it trades back above this range, this is going to be my next target. The reason I drew this to the downside is because I don't want to draw this here like that, because it's got to take out this range. It could, and so you could do that, but it's got to take out this range first, right? And so this is going to be my next target. If it takes out that range, then this will be my next target, right? Now you're above this 3.2 on the 4 hour, and then you'll track this up to see if price can continue to go higher. And then we'll just, we got our next 2 bar here. So we don't have a 3 in this range, but we have a 3 here. So we'll just draw it to this level. And then this will be your next target if it trades back up in this range, because now you're at a 3.22 in your 4 hour, and you'll just want to use some caution here because you'll be trading in this range. You do have a 2 down bar here. It'll get a little crowded, but you could draw that like that. You could draw that like that. All right. So that would be my Disney trade if this thing traded back to the upside. You know, I'm just looking at these targets to see if it blows through it. And if not, it could just get stuck in this range. Then you want to be out. right? You don't want to be inside this, stuck inside this 4 hour, right? And if you looked at it on 90, this is still your outside bar. We'll just draw this from the high. This is still your outside bar in this range. Don't really have a candle for this outside bar, so I'm going to draw it this way. I'm going to draw it this way. And basically what that means is price has got to hit this level here before it can go higher. It's, excuse me. I drew this 4 hour bar. This is the high of yesterday's range and the high of the prior day's range. So for price action to continue to trade higher, it's got to trade above this for me to think this is going to go long. Not sure if that's going to happen, but that's given what the way the market is, but that's where I'd play it if I were trading to the upside. 322 on the 4 hour, with this being my range, my first target. But to the downside, it's gapping down, and look at it pre-market now, guys. It's already at that outside bar. Remember, we drew that outside bar on the daily. It's already hitting that level now. 99.66 is where we drew it. It's now trading at 99.61. So it's already below this range. So just keep that in mind. I would not trade this into the lows. So it's already here. This is where we drew that outside bar. Drew our horizontal line on this outside bar. So it's already in trading below that range in pre-market, came back up a little bit. So here's what I would do, guys. Again, it's a gapper. It's already at your average daily range on that gap. Wait for it and see if you can get maybe a scalp like on coin yesterday. Just be careful that you don't want to trade. So this was coin yesterday. Gapper, you don't want to try to take this to the downside once the market opens, right? Wait for it to trade up, right? Got that inside bar, then you hit it. That's how we're going to trade those. We don't want to trade into the lows. We need this range, because this then becomes our target, the low here. And you can see it traded down, came back up, tight range, tight range, tight range, before it finally broke yesterday's open. This yellow line is yesterday's open. And then you're in the money, okay? So just be careful with that on gappers. I love to trade them, and they give me patience, because I don't have to jump into the market, but I know I have me some volatility. So I know I'll be able to make money. Now it's just waiting for my inside bars on the 6, the 18, or the 3 2s on 18. You can trade that once after the market opens, because on a gapper, you're not going to get an outside bar, right? On an 18-minute, you have to wait for that to form. Then you trade it, make your money. Guys, you don't have to trade every day, and you don't have to trade all day. You just have to trade at the right times. This was a 90-minute, which made this beautiful. I love trading off inside 90s. If the market's doing nothing in the morning, come back at 12:30. Look for those scans for inside 90s. Look for the best opportunity to trade it. Boom, make money. I cannot tell you how much, how often I've caught Tesla off of inside 90. It's a beautiful trade. All right, so let's go. We're gonna wrap it up. And that would, now that I say that, I'm like, boy, that would be something for the small account guys. Because I'm telling, those inside 90s would work. Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Yeah, that just hit me. If you're excited about trading, and your blood is flowing and you're getting all super duper excited, and you're like, yeah. You have to ask yourself, are you really trading using good sound judgment? Or are you hasty? Are you speculative? Are you gambling? What's your risk? What's your reward? If you're jumping in and out of trades without really looking at the potential risk and reward, that may lead to something else. And so I just want you to think about that. I just happened to see this outside bar on coin on this day. Then it went on this 90. Then you had this doji and then went straight up. Rob calls a country and western. I'm telling you, you can just, if you can manage those emotions and say, I'm only going to trade X, you can work your full-time job, or if you don't want to work that job, do something else. And then just come back in the afternoon, do your scans, take your trades. I'm great for the day. You make 500, 1,000, 2,000, depending on your account size and what your risk, and move on to the next day. It's so much less stressful, but that's up to you as individuals and how you like to trade, okay? So I appreciate everybody joining. If you like my videos, please subscribe to my YouTube channel. Thank you very much. Have a good rest of your day.